while the market started correcting around February or so, when news started spreading that the virus had actually started growing more outside China than it was necessarily growing within China. So the markets already started correcting for that, because supply chain is another issue. A lot of the global multinational companies have supply bases in different parts of the world, but primarily in Asia. And the fear was that in many parts of Asia get infected, how will the supply of various components reach the consumers that need to consume them and the factories that are in between? So you had the markets correcting. And then on March 9th, Monday, the Saudis, who lead the OPEC oil cartel, they had called for a meeting in Vienna with the Russians, who are not part of the cartel, but they set the prices. So the price of oil had peaked at about $114 a barrel about 6-7 years ago, and was in the $60 to $55 barrel range till about December 2019, so a few months ago. And it was slipping because of the slowdown in China. China is a huge consumer. And Saudis and the Russians and OPEC said, let's try to limit our production. So when you reduce supply, you keep prices up. Apparently the Russians said, we're not going to play ball, and we don't want to do it. Now, if you're a Saudi oil producer, and they're the largest in the world, you're able to see from your customer base that oil prices, or rather oil demand, is slipping. So probably the Saudis said, fine, if the Russians are not playing ball, we just increase our total volume of production. We will have longer term contracts with those who want our oil, whether it's China or whether it's India, whoever it is, and we'll drop our price of oil to get those long term contracts. So on March 9th, in the Asian markets, before the US opened, the Asian markets, the price of oil collapsed by the most it's done since 1991. And when price of oil fell to $30 per barrel of oil, the markets got extremely nervous, because they said, look, oil indicates whether there is economic activity or not. So if the Saudis are saying that we are dropping the price of oil to win your business, they probably are seeing that demand is falling dramatically, and therefore they want to lock in your business. And if they are seeing that, things must be a lot worse than what the market has already tried to estimate or factor in. So in a complete panic, there was like everyone across the world started selling, starting from Tokyo. And by the time London opened and Europe opened and New York opened, the markets were all completely collapsing. So it was oil that has brought the markets down. Now, from an Indian perspective, we feel a little happy, saying that, look, India imports oil. And because we import oil, the price of oil has come down. That's very good for us. It means we have to spend less of our FX reserves, which we have at the RBI, to buy this oil. And therefore, it will help our current account deficit, and we look pretty good. Also, if price of oil comes down, we can reduce the selling price of petrol at the gas stations. And that makes consumers a little happy, because they're paying less, and therefore they can spend the money on something else. So when they spend the money on something else, that adds to economic activity. So if you spend the money on high oil products, you're really giving money to Saudi Arabia. But if you spend that extra money on something else, you could give money to an Indian company. So that was kind of the expectation within India. But I think that's a little wrong, because if you think about it, India has a total trade of roughly $1 trillion. So about 40% of our total GDP is imports plus exports, of which our import bill is roughly about $500 billion or so. And if we save this price of oil, we'll save some money there, but then we're also exporting to the world. But if the world slows down dramatically, then our exports may get hit. Then the profitability of those companies which export products will get hit. The government will collect less taxes from those companies. So on one hand, we will have to pay less for the oil, which is a positive. On the other hand, the slower economic activity around the world will actually hurt the government and hurt their ability to collect taxes and spend more to get the economy moving. So it may not be that big a benefit from the Indian context. I'd like to just maybe add another thing, is that in terms of oil, so when the Saudis and the Russians did this, it's a little more it may be a little more complex than that. In the US, you've got shale oil. And the shale oil has made is a big US creation, and it's brought the price of oil down, like I mentioned, $140 a barrel 6-7 years ago, down to about 50, 60 till a few months ago. But if at $40 a barrel, shale oil in America doesn't really be that economical. So if the shale oil producers in America close down, then it's possible that the price of oil again can go up in the world. So we don't know whether the Saudis have done this to hurt the Russians, or whether the Saudis have done this to hurt the Americans. Now, in America, there's an election year. Donald Trump is a Republican. Republicans control Texas. Texas has a lot of oil and in that area, and they have to fund elections. Now we are very happy if they see that the price of oil has come down and they're supposed to fund, the sitting president for re-election. So there could be some pressure on the Saudis to say, hey, what you guys doing? I'm Donald Trump. I'm your best friend, and you're just about to hurt me on a chance of re-election. So can you take the price of oil back up again? So these are other little things that may happen, which are, again, out of India's control. We just take the price, whatever is given to us in the world market. But keep a lookout for oil, because oil will have an impact on the mood of the market and how the market perceives energy consumption and therefore future GDP output. If energy consumption is assumed to be low and prices fall, then markets will get nervous, because that implies GDP will be low and therefore corporate profits will be low. Therefore, why should stock prices be going up? They should be going down.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.